Okay guys, welcome back to my channel. Don't forget to like, comment, share and subscribe. For the stock bar, I don't think there's any amounts of research that you can do to protect yourself from this ultra low cap, except getting in really early, said Jordan Belfort. Former stockbroker Jordan Belfort now colloquially as the Wolf of Wall Street, has likened low market cap crypto assets to penny stocks due to their extreme price volatility. Penny stocks refer to highly speculative short price under 1% from small and unknown companies. Generally, they either fetch massive returns for investors or crash and burn dramatically. Belfort's rise to prominence in the 92nd and eventual run-in with the United States Securities and Exchange Commission (SEC), in part due to brokering deals for these stocks. During an interview with Yahoo Finance on Saturday, Belfort noted that these types of investments have the same predictable cycle, which can generate high returns but can also burn investors who fail to cash out at the right time. With those ultra low cap deals, wow, you get a lot of one of those things at the right time. You can make just massive money, but on the flip side of that, you're playing in someone's playground. You know you are not the house, they are the house. You're coming in there, and most of the time you're probably gonna lose, he added. Belfort went on to note that people should only invest in low cap crypto assets if they are willing to allocate a small amount of their portfolio to taking gambles, and suggest they should never fall under the category of serious investments. I don't think there's any amounts of research that you can do to protect yourself from this ultra low cap. Escaped getting in really early. It doesn't matter if it's good management. They are that low that what's gonna end up happening. It's gonna take it right up. And then when it gets to the top, people are gonna dump it. Wolf of Wall Street also not, however, that he has is primarily looking at Bitcoin and Ether in relation to long-term investments due to their strong fundamentals. Instead, he is particularly interested in BTC due to its potential to become a store of value. Inflation hit once the market matures future in the future. I just think it's a matter of time that where and not of it gets into the right hands. There are limited supply, and as inflation does continue to keep going, at some point in time there will be a notch maturity with Bitcoin where it starts to trade more like a store of value and less like a growth stock. Belfort is one of many popular figures in the investment space to do a 180 on crypto over the past couple of years, joining the likes of Shark Tank investors such as Mark Cuban and Kevin O'Leary. Back in February 2018, before predicted the price of BTC would eventually crash to zero, and described the asset as the perfect storm for manipulation. Due to the tightness of the market at the time, he also questioned BTC spots use cash payments as opposed to just being an investment feature, and suggested that it would be regulated out of exchange. Commenting on this change in sentiment with Yahoo Finance, before not who was wrong about BTC going to zero and that life is about constantly advancing and growing. Okay guys, that's all from me. Thanks for watching. Don't forget to like, comment, share, and subscribe.